Courtney. Good afternoon, everyone. My name is Linda Knowlton, and I am the immediate past president for FAMP. And we thank you today for joining our webinar. We have some great information from one of our favorite and loyal supporters and sponsors, and that's Angel Oak. Angel Oak and John and his team will be taking a deep dive into bank statements and other segments that we are eager and waiting to hear, and I'm sure everyone needs and really wants this information. So I am going to introduce John Geminade over to you, representing Angel Oak. And John, you are going to take it away and introduce Scott and Stacy, and then just enlighten us and tell us all about your products and your company.
Yeah, thank you, Linda. And as always, we love being partnered with the best organization across the country, FAMP. So thank you. My name is John Geminade, Regional VP of Sales here at Angel Oak Mortgage Solutions, and I am honored to have two of the best in the industry on this call. Stacy Flanagan, please say hello. And also another pros, Scott Grubel.
Hey everyone, pleasure to be on here. Thanks for taking the time to come on and talk a little bit about the bank statement program.
Yeah, so everything we're going to do here today is on our website. We're going to just talk about bank statements. But before we go into some highlights of the programs, we're going to encourage everyone on this call to use that chat. If you've got questions, send them through the chat. We'll get to them all. And like I said, we've got two of the best in the business to answer your questions. So without further ado, but before we talk about the highlights of our programs, we really want to make you guys subject matter experts. So we're going to talk about the 1003. We're going to talk about what we'd like to see on a credit report, and then we're going to talk about our highlights here. So Scott, give us kind of your best practices on when you get a 1003. What do you like to see? What are the most important pieces of information?
Yeah, absolutely. So the 1003 obviously is the roadmap for us when we're doing a pre-approval for you all on the bank statement program, just the way it is when you're running it through a DU or an LP or any other AUS, right? So there are certain specific things that are going to change when it comes to a bank statement program. For the most part, your 1003 is going to be just like you would for a conventional loan. So your personal information, obviously, you're going to have all of that information there. For us, it's very helpful to make sure that you have the last 2 years primary residential history there. And if the borrower is renting, obviously, please include the amount that they're renting. And for the employment section, the employment section is where we get a little bit specific for the bank statement program, because keep in mind, the baseline requirement for the bank statement program is your borrower must be self-employed for 2 years. So obviously, we want to be able to see that self-employment and the 2 years of history listed on the 1003. Now, for bank statement programs, self-employed can mean the borrower owns a business, the borrower may be a 1099, or the borrower maybe is a Schedule C or sole prop filer. So we'll go through the different sections. So as a business owner, obviously you're going to list the borrower's, the name of the business that the borrower owns, in the employment section, how many years they own it for. But very important, what we're going to ask you to do in terms of the income is not list any income whatsoever, or if your LOS requires something to be inputted there, you could put in a 0 or even just $1. The reason for that is because obviously at the time that you're taking the application and sending it to us, we haven't calculated the income on the bank statements yet. So we don't know what the income is. And we're not basing this on anything that's on the tax returns. It's strictly going to be based on the bank statement. So very, very important. If you want to make a quick note, guys, income on the 1003 should always be left blank, or you can input a 0 or a $1. So getting back to your business owner, you list the name of the business, how many years the borrower has owned that business for, and what percentage of the business the borrower owns. Let's take a 1099 individual. For a 1099 individual, it can get unique, right? Ideally, let's take a realtor, for example. They're going to get 1099s from the one agent or agency that they work for. But there are other professions, truck drivers are a good example, where that individual might be getting 1099s from multiple different businesses. So we're going to look to count the deposits coming into that borrower's bank statements from all of those sources that he receives his income from. Therefore, we would need them all listed on the 1003 if you have a 1099 individual that happens to get paid from multiple different sources. Okay. As far as your Schedule Cs or your sole props, those are where it can get tricky, right? So what we want to do is you can list in the name of the employer the borrower's name, but when you put in the position, that's where we want a little bit more detail in terms of the description. So let's take a handyman, for example. You might list, John Doe as the employer, but then in the position, you're going to write handyman / construction, painter, etc., whatever the case may be. And then obviously beneath that, you're going to list how many years the borrower has been doing that for. So this is probably the most important section, I would say, for the 1003 for us as an account executives when we're reviewing it to do the pre-approval for you, because the information that's put on the employment section can and will affect how the income is calculated when we send the income to get calculated by the bank statement review team. Okay. After that, we really want as complete a 1003 as possible. So if the borrower owns any other real estate, obviously you want to list it there. If the borrower is going to be renting out a current primary, their departing residence to purchase a new primary, we would like to see that information there, get an idea of what that rent is going to be, because we can use that rent to wash out the payment on the property that they are departing. Your assets, ideally it would be good to have all of the assets listed, not only what they're using to purchase the subject property, but any other assets they may have to cover the reserve requirements. And then after that, your 1003 is going to be straightforward. It's going to be just like you would for any other conventional loan. Again, the most important details there is going to be the employment section, and then obviously your REO and your assets.
Yeah, thanks, Scott. It's kind of a lot of information there, but we have AEs who use the word that 1003, that loan application is the DNA of that borrower. And the more information you can share with us, because 30% of the programs that Angel Oak closes, or 30% of the loans Angel Oak closes, don't meet our guidelines. And what helps us and Stacy and Scott and all the other great AEs across the state of Florida close those loans is the information that you're providing on a 1003, compensating factors. Let's get back to that, right? So Stacy, talk about what do we look for on the credit report?
Hi, everybody. Thanks for having us. I think I was muted when I was supposed to say hello. So on our credit report, the account executives, you guys are going to be sending us the pre-qual. And when we do the pre-qual, that's one thing that we're going to be looking for. We're sending the bank statements, like Scott said, off to the bank statement review team to do that calculation for you. And in the interim, us AEs are going to be looking to make sure that they credit qualify. So we're going to be looking at their credit report. The minimum score is a 640 right now. That'll get you to 80% LTV, and as low as a 660 will get you to 85% LTV. So we're going to be looking at the scores. We're also going to be looking at the trade lines. We do have a minimum trade line requirement. It's 3 trades for 12 months or 2 for 24 months. And they can even be closed as long as they had activity in the last 12 months. So it's not a lot that we're looking for as far as the trade line goes. That is something that we will look for. And to piggyback off that, if they are short a trade line, like Scott said, the better you do your 1003, the more compensating factors we have, the more we can give an exception to maybe if they are missing a trade line. So that's very important. We also don't want to see any collections or charge-offs unless they're medical are ignored, but no collections or charge-offs in the last 2 years. And we only have a 24-month seasoning on bankruptcies, foreclosures, and short sales. So that's pretty aggressive too. As far as the bankruptcy goes, if it's a Chapter 13, we will use the file date. So they can be discharged yesterday as long as it was filed over 24 months ago and had perfect pay history on that bankruptcy. You can also do what I kind of call it the hybrid bankruptcy program, where maybe there's a spouse that has W-2 income. So if we can clearly see who the primary wage earner is, that's the mid score that we're going to use for qualifying purposes for rate and LTV. So if your borrower is self-employed and they make $5,000 a month and the co-borrower is W-2'd and he or she makes $6,500 a month, I'm going to use that $6,500 a month because they're the primary wage earner. I'm going to use their mid-score to qualify. So again, we're going to be looking at those items and those things when we do the pre-qual on it. We also are very aggressive in the mortgage rates. We do allow a 1 times 30 in the last 12 months. We know that life happens. You know, people make mistakes. Something happens in life. They forget to make a payment. Their auto payment didn't get set up correctly. So we do allow 1 times 30. And even if you had something maybe beyond that, again, exceptions can be made. So definitely, we're going to be looking at that as far as on the credit bureau, but it's pretty straightforward.
Yeah, thank you, Stacy. And as you guys can tell, Scott and Stacy are the best in the business and being able to go into that detail. Scott, take us through the highlights of the program. I know we covered some of that, but just take us through the highlights of the program, and then we'll dive deep into answering any questions or pointing out some other highlights of the programs that aren't here on our website.
Absolutely. Perfect. So we'll going through, and this is right at angeloakms.com. This is accessible to anybody on this call. You just go over and click on that programs tab. And for any of the products and programs we offer, you're going to see all of the highlights available. So for our bank statement program, currently credit scores can start at a 640. The program does go up to an 85% loan to value as of today. Hopefully we'll be back up at 90% pretty soon as the market stabilizes, but we are at 85% LTV as of today. Loan amounts go up to 3 million on the high side. So obviously you can do jumbos here. And we actually do get a lot of high-end properties on the bank statement program. We do have a minimum of 150,000 loan amount though. Minimum on the bottom side, 150 up to 3 million. We can do 12 or 24 months bank statements, and those can be business or personal. So to kind of elaborate a little bit there, if you have a business owner, that business owner does not have to use their business bank statements. Maybe they're the type of business owner that consistently takes distributions from their business to their personal account, and we can use the personal account to qualify them. In those particular cases, we're actually able to use 100% of the deposits that go into the personal account because we know that the borrower has a business and is not paying any business expenses from the personal. But we have the option of both. On a 1099 borrower, you're usually always going to use a personal bank statement. And then on your Schedule C and your sole props, you're usually going to use the personal bank statements as well. As Stacy mentioned, from a credit standpoint, we're very flexible. There's only a 2-year seasoning requirement for your foreclosures, your short sales, your bankruptcies, and your deed in lieu. So that's obviously a lot more lenient than you see on the conventional side. Currently, we offer all 30-year fixed on this program. And as I mentioned earlier, the baseline requirement is you do need 2 years of self-employment. The borrower on the business side, if you're using business bank statements, the borrower can be as low as a 50% owner of the business, which is a huge benefit. They don't have to own 100% of the business. If they're a 50% partner, 60%, 65, 70, et cetera, we can still use the business bank statements to qualify them. And what we're going to do is we're going to use whatever their percentage of ownership is in the business as the percentage of the net income that we're going to use to qualify when we do the calculation on the bank statements. For personal bank statements, it's actually a little bit more lenient. So if you have some business owners that own less than 50% of the business, they can actually use the personal bank statement program as long as they have a minimum of 25% of the business. So this comes in handy. Nowadays, you do have a lot of people in this gig economy where they own maybe a little piece of a bunch of different companies. As long as it's 25% of those, 3 or 4 different companies, we can use the income from all of those sources on the personal bank statements. As far as the type of transactions we can do purchase, we can do cash out, and we can do rate and term. I'd like to point out that we actually do cash out refi on primary, second home, and investment up to 85% LTV on the bank statement program, which is pretty strong. It's hard to
Scott, I'm just going to jump in here quick. Just, 30% of the loans we're closing right now are cash out refinances. A lot of people have equity in their homes. And you know what I love? The 4 things I love about cash outs: no seller, no seller's agent, no buyer's agent, no contract date, right? So, so anyway, sorry, Scott, just wanted to.
That's a great point, John. We're starting to see it, guys. I'm seeing as an account executive, we're starting to see those cash out refis come in the door for these borrowers that have all of that equity sitting in the property, and they're starting to consolidate a lot of that high interest debt, because as we all know, with the rates going up in the mortgage business, so are the credit cards and everything else. So again, primary, second home, and investment properties, we can do all 3. As I mentioned earlier, we can do cash out on all 3 as well. And by the way, we also offer an interest only option on all 3: owner occupied, second home, and investment property. Talk about the interest only, since I brought it up. So the interest only program is a 40-year interest only. The way that works, 40-year loan, I'm sorry. The interest only period is for the first 10 years. And then after those 10 years, it amortizes to a standard 30-year fixed principal and interest. That happens all at the same rate that you locked in from day one. So when it converts from interest only to 30-year fixed, there is no change or adjustment in the rate. What's also really cool about the interest only program is that during the interest only period, the loan recasts on a monthly basis if your borrower does happen to pay down interest. So what we see is a lot of the borrowers that take interest only are the type of borrowers that, they may come in and pay a big chunk of the principal off at any given point throughout the year. If that borrower happens to do that, let's say they pay $100,000 off principal today, October's payment is going to be based on the new principal balance after that $100,000 is applied. So that's a really cool feature on the interest only. Jump back up 1 spot, 1099 option. So the 1099 option on this program, it works just the way we do with 12 and 24 months bank statements, in the sense that you can use 1 year 1099 or 2 years 1099. So a good example I like to use on this is realtors. We do a lot of realtors on the 1099 only program, because realtors can have a good month followed by a bad month, or 2 good months and then 2 bad months. They went on vacation after they had 2 good months, etc. So on the bank statements, there's a lot of inconsistency in terms of the deposits. But if we look at the 1099, we can just see the full total income that they earned for the year prior. So in this particular case, let's say they had a great year in 2021, and that income shows obviously a lot higher, then we can use just that income for 2021 to qualify them. Or if they had 2 good years, we can average out 2020 and 2021. So there's some flexibility there. On the expense factor here, most of the loans are going to be qualified on an expense factor of 50%. However, companies that offer a operate at a lower expense factor, we can use an expense ratio as low as 15%. So let me explain how that works. I like to call it our default. Our default expense ratio when we're calculating income for business bank statements or personal is 50%. In other words, if there's $1 million in deposits, we're going to take 50% off the top for expenses. That leaves us $500,000. And then we're going to average that $500,000 over the 12 or the 24 months that we're using to qualify, right? However, we do realize that there are a lot of businesses, especially today, that maybe are service providers that work from home. They have no overhead, they have no employees, no payroll, and their expense ratio may be a lot less than 50%. So we will allow those businesses to go down as low as a 15% expense ratio. In other words, we're using 85% of the deposits on the bank statements. In order to do that, we do need an accountant letter. It could be an accountant, a CPA, a tax preparer, but we do need a third-party verification confirming, hey, we can confirm the borrower owns 100% of XYZ business, and that business operates at an expense ratio of blank percentage, whatever it happens to be. But there's a lot of flexibility there, as you can see, depending on what type of business the borrower's in. Non-warrantable condos. We do non-warrantable condos. This is a big topic on this program. We actually do it on all of our programs. Obviously, for you guys in the conventional world, you're aware that there's a lot of things that can make condos non-warrantable, especially with all the new inspection requirements we're seeing now from Fannie Freddie. We do not have any of those requirements. And we're very flexible in the way that we calculate reserves, in the sense that we don't look at just the current year's budget. We will also look at any separate reserve accounts that the association might have already funded from previous year's collections. And we can combine the two to meet the reserve requirement. So from a non-warrantable condo standpoint, I'm sure Stacy can attest, we save a lot of them. I get a bunch of them every month. We're like, this deal, I need help, it fell out. There was an inspection that popped up. We can't get it closed conventionally. We can usually save those loans and get them done either on the bank statement program or one of our other programs. Loan amounts of over 1.5 million, just like you would see with any jumbo lender, do require 2 appraisals. But that's pretty much it. That's I mean, I don't want to say it's pretty much it, but that's pretty a good coverage of exactly how the program works. I'm sure there'll be some questions coming in that we can start to answer, John.
Yeah, Scotty, great. Thank you for giving us a real good coverage of those highlights. A couple of things, Stacy, Cecilia is asking here, cash out refi for LLC owned properties.
Sure. So if they want to close in the LLC, assuming they want to carry that over and close in the LLC, we can absolutely do that if it's an investment property. So we can do cash out up to 85% LTV, whether it's a primary, second home, or investment property. But the only time we can close in an LLC is if it's an investment property. Now, if it's an investment, if it's in an LLC and they happen to move into the home at one time, so now it's their primary, we can still do a cash out refi, but at closing, they will have to transfer it to their personal name. I can't close a primary in that LLC, but they can do that at closing. I know conventional requires you to take it out, I think 6 months. I'm not too familiar with the conventional, but I know it has to be taken out of the LLC for a certain amount of time before we can close on a primary in their personal name. Will allow you to do that at the closing table.
Good information, Stace. Hey, Scott, you talked about purchase, rate and term, cash out. I know we still, there are a lot of pockets that are still pretty hot. Talk about delayed finance and when a borrower has to pay cash for the house.
Absolutely. So delayed finance transactions are allowed on our programs, all of our programs, including the bank statement program. So if your borrower happened to purchase the property with cash that we can verify was the borrower's own cash, or if the borrower happened to use a hard money loan to purchase the property, we can, in the event of the borrower purchasing in cash, we can refinance them at any time during the first 6 months. We base it off of the purchase price, of course, but what we're doing is we're allowing the borrower to pull the cash out that they used to purchase the property. If they used a hard money loan, we can do it at any time during the first 3 months. The cool thing about how we do it is, even though some people like to refer to these as refinances because they're pulling that cash back, we actually treat it from an underwriting standpoint as a purchase. So we can go up to the 85% LTV on that delayed finance transaction.
Yeah, thanks, Scotty and Cecilia. Stacy, Cecilia said thank you for helping with the LLC. Couple other questions. Sorry, looking. Stacy, talk about some of the property types that we'll do.
So that's a good one. So yeah, we will do 1 to 4 units. So single family up to a 4 unit. And then we can also do obviously condos, which we talked about, townhouses. We don't do any mobile homes or manufactured homes. We don't do anything over 4 units.
Yeah. Thanks. Scott, talk about, well, let's talk about this. Scott, I know you said you mentioned when the 1003 comes over, leaving the income blank or with $1, talk to us about our bank statement review team.
Yep. So the process and how this works is when you guys submit a file to us right here through our website, through our pricing engine for a pre-approval, you're going to be able, and we'll show you a live example later, how you'll be able to drag and drop your 1003, your credit report, and all of the bank statements quickly, easily into a bucket and hit submit, and those come right over to us. We as AEs will then review the documentation. If there's anything missing, let's say for whatever reason we were missing a bank statement, we'll let you know. But as far as the income calculation, we do it all for you. We hit a button, we submit it to our bank statement review team, and our bank statement review team sends us back a full broken down income calculation that we can obviously share with all of you, so you can see exactly what the income is that we're going to be able to use for that loan. And then we can also discuss it, because we might get the income calculation back for the business and say, we thought maybe there'd be a little bit more. Say, all right, let's take a look at the personal statements. You drop those over to us through one of our secure links, and then we can submit those into the bank statement review team. And usually same day, if not within 24 hours, we have an income calculation back on that. The point is that we do all of the income calculation for you. You guys do not have to worry about going through the bank statements and, what deposits can we count, can we not count? We take it all out of your hands and we take care of that all for you.
Yeah, and it's all done at the pre-qual stage. So, your Scott, Stacy, or the other 6 account executives here in Florida, no one's going to produce a pre-qual for you without that income being calculated and agreed upon, and without the credit being reviewed, the 1003 being reviewed. Stacy, you mentioned it briefly. Talk about maybe a borrower who's self-employed, maybe who the spouse is W-2, maybe kind of go into that kind of scenario and how we can use that W-2 income.
Yeah, so the bank statement program is obviously for those self-employed, they write everything off. So using the deposits going into their bank account, we get a lot more income. So it gives them more buying power. They can afford a higher priced home. And the same thing with adding a spouse that's W-2'd or gets alimony or child support or fixed income. That just gives them more income to use to, again, increase that buying power, get into that bigger home or more expensive property that they really want to purchase. And what we would want from them is, if they are W-2'd, we want their last 2 years of W-2s, 30 days of pay stubs, or if it's fixed income, proof of their fixed income. We never want to see tax returns. So do not submit tax returns, just their W-2s and pay stubs or proof of their fixed income. And again, this just gives them more buying power to increase their overall income that we can use monthly.
Yeah, thanks, Stacy. And Scott, you talked about a little bit earlier about a realtor. One of the things I did want to share here, 9% of the loans Angel Oak closes on our bank statement or 1099 program are actually realtors.
Yep.
So think about that as we're also going to talk a little bit about rates. I know someone's asked a question here about rates. We're going to show you a quick quote tool here in a few minutes, and then we're going to tell you how to find these borrowers and how you can market to them. So a couple other questions coming in. Speaking of pre-quals, Stacy, one other thing I did want to talk about, sorry, I'm getting mixed here. So when Scott talked about the 1003, here's what I always talk about: a best practice. If I'm a loan officer and I know I am going to meet with a self-employed borrower, why not at that time get their tax returns and then get their bank statements and go down those parallel paths? Because the question I'm going to ask Stacy, do we do pre-quals on TBDs?
Yes, we do, John. Thanks for asking. So we can get that income calculated for you up front before your realtor even goes out and starts shopping with these borrowers. So that's an added benefit that you can provide to your realtor partners, because knowing that they can't use their tax returns to qualify, or that they don't qualify for much off their tax returns, us pre-approving or pre-qualifying their income ahead of time will say, hey, you know what? I know you thought you could only shop for a $250,000 house for this borrower based on their tax returns, but we have an alternative way to calculate their income, which allows them to go purchase a $600,000 house. So now you can go in this shopping, this price range. So it's a real added benefit for you guys to be able to give back to your realtors.
Yeah, Stacy, what referral partner or realtor wouldn't want to know that, hey, we just got done pre-qualifying the borrower 2 separate ways, and guess what? I'm going to increase your commission by over $300,000. And let's face it, it's really not W-2 people buying those luxury homes, right? It's that self-employed borrower. So, so great point, Stace. Couple other questions. Yeah, we will calculate W-2. We talked about W-2 and a self-employed. That's looks like kind of the questions coming in. I don't know, Stacy, you get, thousands of scenarios. So do you, Scott. Anything that we haven't gotten a question that you maybe think our audience here today should know, would like to know, or is a tip or trick to doing bank statement loans?
That's a good question.
One thing I'll add, kind of to just spin off of the point that you and Stacy just made, John, is as far as, to me, it's a no-brainer. If you're interviewing a borrower up front and you know that borrower is self-employed as a mortgage professional, it costs nothing to just say, hey, get me your tax returns. But in addition to that, please send me your business and personal bank statements, right? So you get all the information up front, and now you have everything you need to truly pre-qualify that borrower. We see it all the time. Even if the borrower claims plenty of income on the tax returns, maybe he claims a couple of $100,000 on the tax returns, but it costs you nothing to just, drop the bank statements into the system here, submit them over to us. And in 24 hours, we might calculate that income and find out that gives us $400,000 a year. So like you guys said, you look like a hero to your realtor saying, look, I can get this I can pre-qualify this borrower for a $1 million, $1.5 million loan using the bank statements, whereas on the tax returns it was only $600,000, $700,000. One of the other points I actually wanted to bring up also regarding cash out refis, our seasoning to use appraised value is only 6 months. So that's another benefit that we get to use a lot.
Great point, Scott. So Alejandra's asking a question here. At what point do we decide to choose a bank statement versus a traditional? That's your consultative advisory position with that borrower to have that conversation. Mm-hmm. And the beautiful thing is you can have choices, right? You're not just stuck with the tax returns. You can either go bank statements, and it's really, what does the borrower really, feel most comfortable with? And that's where your advisory role comes in. I'm sorry, go ahead, Scott.
No, I agree with you 100%. That's the benefit of getting all of the information up front. You're going to run your income calculation on your tax returns. We're going to run the income calculation for you on the bank statements. And now you have all of that information and you can determine which is going to be the best path for your borrower.
But it is so much better to do it up front versus now you wrote a prequel letter, you finally got their tax returns, you find out that they've written everything off, versus having to use bank statements as a last resort. Mm-hmm. And everyone's hair's on fire and we're under the contract date, and there still are multiple bids out there, and potentially lose their dream home. So
and John, our experience has been, you can attest to, Stacy, our experience has been, guys, for everybody on this call, is the bank statement loans are easier to close than a conventional or jumbo full doc loan for a self-employed borrower, because you guys have all seen everybody on this call has seen the tax returns for a self-employed borrower. They're complicated. They're not easy. And you could run those tax returns, right? How many times have you run those by 3 different underwriters and you get 3 completely different numbers in terms of the income, right? For the bank statement program, we're eliminating all of that. At the pre-approval stage, we're running the income on the bank statements and we are telling you what that income is. So now that loan, you can go borrower can go shopping. They can use that pre-approval letter, buy their house, go under contract with that confidence, knowing that we already know what the income is. And when we submit the loan to underwriting, the underwriter does not have to recalculate that income. It's already done for them. So think about just how much quicker that speeds up the process to get an approval out to you guys and get that loan closed.
Yeah, so instead of, go ahead, Stacey, sorry.
Yeah, that's fine. I'll add too, I get a lot of brokers, well, how am I going to sell this rate? The rate's going to be higher than conventional. And I say, yes, it is going to be higher conventional because it is an alternative way to calculate their income. Maybe they write everything off and don't even think that they can afford a house to begin with, or again, afford a very, a smaller home or a less expensive home. But right. I will tell you, I've never had a bank statement borrower complain about the rate, because all you do is turn around and say, look, you can claim all your income and pay the IRS 35% of that, or you could take a little higher interest rate and get in the house of your dreams and still pay the taxes that you pay today.
Exactly. So, and that higher little interest rate is tax deductible. So So Alejandro, so I would suggest when you are talking to that potential buyer, go get 24 months of their bank statements. Again, Scott, Stacy, they are the subject matter experts. They're going to tell you whether you should use 12 or 24. And in most cases, you get a little bit of pricing of 24, but if we have to use 12, maybe their business is really thriving in the last 12 months. So we'll drop off months 13 to 24 so we can use the higher income.
Yep.
And I just want to throw a statistic out there. In 2020, new business applications grew by over 24% over 2019. That was the largest increase in new business applications in over 10 years. In 2021, new business applications grew by over 22% over 2020. So this is the largest segment of the workforce growing. And guess what? Those 2020 new business applications, they're eligible for our bank statement program today. So,
well, John, not only that, but for everybody on this call, we have the benefit of the last 2 years, the #1 state for new business applications has been Florida.
absolutely, Scott. Yeah, I'll send Linda those. So that, again, someone's asked me to repeat those numbers. I know I threw out a lot of numbers and I'm talking fast because I get excited about it and everything. But in 2020, new business applications grew by over 24% over 2019. That was the largest increase in over 10 years. And in 2021, new business applications grew by over 22%. So I mean, you've got, do the math. And like Scott said, a lot of those new businesses are moving to Florida. So you guys are reaping the benefits. So I know we're about 40 minutes to 20 minutes to the top of the hour. We've got a couple of cool tools we want to show you here. And I'll give you my email address, johnj@angeloakms.com. If there's anything you need to contact us about or find an account executive, I can definitely share that information with you. Scott, take us through how to get rates and also how to send you and Stacy and everyone else a pre-qual.
Okay, if we can go to the homepage, John, so we can show. So if you guys go to our homepage here, angeloakms.com, right in the middle of the page, you'll see our pricing engine, the non-QM quick quote, which is where you're going to go for any of the non-QM pricing, program pricing. So if you click on that, it'll take you to this page. As a channel type, unless you're a correspondent with us, you're going to always select broker. And then once you select broker, you're going to see that these drop downs, the information needed to pre-qualify your loan or to price your loan is going to start to pop up. But notice one thing, guys, it did not ask John to enter any credentials. You do not need credentials to access our pricing engine. All of the information is right here for you. So John will go ahead and punch in a scenario here. Let's say, I don't know, we could say a jumbo on this one, John.
Yeah, this is 600,000.
Okay. Credit score, I guess we'll go by our standard profile, is usually a 740 and up on the bank statement program. We'll punch in an LTV of, what do you think, John?
Our average LTV is 73, Scott.
Okay,
So
75. Property, housing history, 0 times 30. This is where you would input if the borrower had any lates on their mortgages in the last 12 or 24 months. In this case, we're going to say 0 times 30. We'll do this as a single family, a 1-unit purchase transaction. In the income documentation section here, you'll see it defaults to full doc, but this is where you would put in the different income types. So you'll see there the different options we offer on full doc, followed by the 1099, 2-year and 1 year. And then obviously you have your 12 months business and personal, 24 months business and personal, and the other programs we offer as well. So we'll select the 24 months here, primary residence, US citizen. We'll say this is going to be a 30-day lock. We're closing loans well inside of 30 days right now. If you did want the interest only option, you have the drop down there where you can make the change to the 40-year, or you could leave it as no for a standard principal and interest. And for example purposes, we'll leave this as a borrower paid loan. So you can see right here at the bottom, it's telling us the LTV you requested is 75%. It's notifying you that the program does go up to 85%. The rate at the LTV you requested of 75% is a 7.125 in this case. Again, that's a 30-year fixed. Bankruptcy seasoning, if there happened to be one, is 24 months. Housing event seasoning, if there happened to be one, is 24. We need 6 months of reserves. And again, this is a reminder that this is a 30-day lock. If you wanted to see the full table of rates for this with lender credits, or if the borrower wanted to buy the rate down, you would click on that See Rates. And as you can see now, you have the full breakdown, the full table of rates here, the whole stack showing everything. So in this case, we'll go with the par rate of 7.125, and then we're going to click Select Option. Okay. So now this will take you to step 2. If you scroll up a little bit, John, is step 2 of the quick qual. We have it blown up here, where if you have a completed 3.4 file, you can drag and drop it in here, and we'll be able to pull the information from there. But let's assume you don't, right? It's pre-approval. You just want to get your income calculated. You have your 1003 put together. You have your credit. You'll click on Next. And in page 3, as you scroll down, you'll input your information. So account executive is where you're going to select who your AE is in the dropdown by alphabetical order, your company, your information, and MLS ID, etc. Down at the bottom here in the loan document section, here's where you can drag and drop your 1003, drag and drop your credit report. And then if you scroll down a little further, you have a section for the 1008, but most importantly, you have a section to upload, drag and drop your bank statements. And right above it, there's a section for the business questionnaire. So the business questionnaire is a questionnaire that we require on all bank statement programs. You can click on that blue link, it'll pop it up for you so you can send it to your borrower. And really all it is the borrower telling us a little bit about the business. You know, what is there a website, what type of business it is, how many employees he has, etc. In these boxes, especially the bank statement box, guys, you can literally highlight up to 24 months, in some cases more if you need to, and drag and drop with one click right into that box. And then as you scroll down a little further, you'll answer a couple questions for credit history, and then you'll hit submit at the bottom. As soon as you hit submit, that pre-approval is being sent with all of that documentation to your account executive instantly. And within 2 minutes, they can start working on that pre-approval, send the income out to get calculated. And once it's completed, send you back a full broken down pre-approval.
Hey, Scott, that brings up a good question. What's the turn time to get a pre-approval back?
Within 24 hours. The turn time to get a pre-approval back is within 24 hours for the most part. Now, if there happens to be, you know, a scenario that we have to reach out to the loan officer, dive into it a little bit further, that might get delayed into 48. But for the most part, assuming this comes through, it's complete, it's cut and dry, all of the documentation is there, within 24 hours, you're going to have a pre-approval on your desk.
Right. Yeah, Scott, one of the things, kind of, it's a frequent question, or Stacey, I'll go to Scott because I know Stacey's going to take us through the marketing part. Scott, what if a person had 2 sets of businesses? Would that be something we could, you know, use both businesses for the income?
Absolutely. So if the borrower maybe owns 2 different businesses and he has a separate set of bank statements for each business, we can use both businesses to qualify the loan. The most important thing we're going to look out for when we run the income is we want to make sure he's not commingling funds between those 2 accounts. As long as he's not doing that and they're truly 2 separate businesses, we can certainly use the 2 businesses for qualification purposes. And you can upload all 24 or 48 of those bank statements right into that box in the pre-approval in this section right here.
Yeah. So thanks, Scott. So Stacey, we've been pushing how to market, how to find these borrowers. Let's talk about how we can help them, maintain, or what we prefer is grow their business through our marketing portal.
Yeah, we have a great marketing department. You do need credentials for this part of it. So definitely reach out to your account executive to get you set up with some login credentials. Once you do log in, you'll have access to, which John is going to show us how to do this, but you're going to have access to presentations. What's that?
Maybe I will. My screen I'm going to have to minimize my screen. There we go. Okay. Sorry. Operator.
Yes. Somebody just asked if we are a wholesale lender. Yes, we are a wholesale lender. We're not hard money or anything. We don't charge any points. So right here, so after you log in, this is going to be your landing page. Once you log in, you'll see that marketing portal tab at the top. So you've got your presentations is the first tab that you can go to. These are presentations that you can customize with your information, realtor presentations. And we'll go out there as account reps. We'll go out there and do these realtor presentations with you on your behalf. We'll go ahead and do these for you and with you. So you can customize these with your logo and your information on them. So if you click on that marketing portal again.
Sorry, I missed. Hold on. Yep. Go ahead.
You have the whiteboard, social media, and flyers. So if you go down to the flyers tab, the flyers tab is actually where you can customize tabs or customize flyers with your information again. So if you click on a flyer, on the left-hand column, you can enter your information. You can also enter your logos. You can do your own disclaimers if your company has their own disclaimers that they need you to use. And you can even upload your own photo. I've had people put their favorite football team logos up there as well, which was kind of fun. But yeah, this is going to be all yours. So we're basically doing the work for you to be able to go out with free advertising and take them to realtor opens, open houses, drop them off at wherever you're wanting to solicit. Maybe it's some bankruptcy attorneys, or, you know, customize the flyer. Maybe you're going to go to a realtor that does foreign nationals, or in our case, we're doing bank statements today. So people that deal with a lot of self-employed borrowers. So this, again, you do it once on the left, and it's going to download to every single flyer in there. And we even have Spanish flyers at the bottom as well. For those of you that want those, I can't read it to you because I have no idea what it says, but so that's great as well. And then again, if you do it that one time, it populates to all the flyers in there. And then if you go back up, John, to the social media, we all know that social media is a huge part of getting business right now. It's the day and age of social media. So we have these quick little flyers, if you will, that you can put on Instagram or Facebook that just is a quick little blurb to get people's attention, to get them calling you on what the bank statement is all about, what the bank statement program is. So these are great flyers for you to just be able to throw something on social media, you know, out of sight, out of mind. Just keep people interacting with you.
Yeah, Stace, I mean, you know, I kind of, sometimes I get a little frustrated. We built this for you. You do not have to go out and recreate the wheel. As you can see, these bank statement, they're for Instagram, or Pinterest, and they're directed, the content is directed for borrowers. And then we also have it directed towards realtors. So we've created this for you, but I think the most powerful presentation you can do, and I know Stacy and Scott do a lot of these on behalf of their loan officers. And, you know, we've got 8 account executives across this state. So there's probably someone really close to you that would go out on your behalf, and they go out and they present on your behalf. They don't say anything about Angelo. They just say, I'll use Linda because Linda kicked off this. They would go in there and present on Linda's behalf. If you know, we're just one of Linda's investors. That's it. They don't say anything about Angelo. So when you have a self-employed borrower, what are you going to do? You're going to call Linda. And, you know, that we go through all the programs for Linda on her behalf. She doesn't have to be a subject matter expert on all of our programs. Stacy, Scott, anyone else in the state is already a subject matter expert. So I don't know, Scott, if there's anything else you wanted to add, or Stacy. Nope. Okay. Well, Linda, that's, you know, we're and I know some other things I'll throw out there. I know Stacy does a few podcasts on behalf of some of her customers. So really start to think of ways to market yourself outside of your normal comfort or your normal channels that you market. So
yeah, sorry, I was actually muted, John. I would add that I think these marketing tools are the most underutilized tool out there right now. It's free. If you are an approved broker, loan officer with Angel Oak, all of this information is 100% free for you to use. And what better way to get your foot in the door to maybe a new, you know, real estate office or referral partner or an existing one to try to come in with some fresh new information that can set off some light bulbs and really capture everybody's attention. I mean, at the end of the day, they're going to send you their conventional business anyway, FHA, et cetera. But what better way to get your foot in the door and capture their attention and talk about bank statement programs, debt service ratio programs, et cetera. These are the things they're not hearing on a day-to-day basis.
Yeah.
Well, I think you're exactly right there, Scott. You know, we all have to set ourselves apart today because we're all competing for that same customer and that same realtor. And I think these marketing flyers will allow all of us to do that. So those are very impressive. So thank you very much. I just had a couple questions as far as what your most popular product then you would say is your bank statement loan?
Absolutely. Bank statement. Bank statement's number one. DSCR, which is a debt service coverage ratio for non-owner occupied. That's, we're seeing, you might see a few, Scott and I talked about this yesterday. You might see some owner occupied people kind of maybe step back, maybe wait. Your investors are still aggressive. They know that this is their way to accumulate wealth, and it's through real estate, and investors, they're not shy. And if the property cash flows, or even if it doesn't cash flow, I don't want to go into another program here, but but if you give us some more time, we'll go through it. So, but I just think investors, they know it's about cash flow, and that's why we're seeing a lot more people, even on owner occupied, use interest only, because for self-employed borrowers and investors, it's all about how to cash flow. So.
And so when you're talking about your bank statement loan, if we're ready to close within a week and we're going over into where the bank statement's now 30 days old, we have to update those statements as well as all within a 30-day seasoning. Is that what you indicated before?
I'll let Scott or Stacy.
Yeah, they're actually good. The income calculation is good for 90 days, believe it or not.
Yep.
So we can calculate it with a 90-day out. If it does come up to where you're getting ready to go to closing and the bank statement worksheet does become expired, so you've gone to your 91st day, all you'll need to do is give us 1 month of bank statement to get it right back to active. If you want to give us 2 months, that's fine too. If they have a better calculation, we can look at that and just update the income.
Okay, that's good to know. And that's a great feature. So you don't feel like you're constantly updating and never get to closing. So,
Right.
So
the hamster and the wheel.
Okay, and one last question before I put John on the spot. So, the seller contributions, did you touch, we talked about that before everyone got on. So how about, as we're into this rate market fluctuation and uncertainty to a certain point, seller contributions are allowed on all your programs, especially the bank statement?
Absolutely. Owner occupied 6%, non-owner is 2 or 3%. 3%.
Okay, great. That is good to know as well out there. So, John, I'm going to just kind of put you on the spot. We all know interest rates this is kind of the big day that has been told to us the last 48 hours or so. Where do you think rates are going to go, and do you think we need to be nervous about this? This is the market. Give us your opinion on our industry in 5 minutes or less here.
So rates are going to go up. I'm not an economist, but they are going to go up, right? But I learned an expression last week, and you marry the house, you date the rate, right? So what goes up must come down. And I think, you get someone in a house today, and I think Barry Habib, he was at FAMP, and he said it, he goes, you're creating your future refinances, right? You get people in the houses, get them on the path to start accumulating wealth, because we all know real estate is the best way to accumulate wealth. Home ownership is the greatest way to feel great about it. Hey, rent rates are going up, and Scott, what's the interest rate on rental properties?
The interest rate on rental properties is 0.
No, 100%.
Oh, I'm sorry. Yeah.
I'm sorry.
So I was thinking of it the other way around.
Sorry. No, but if you're renting today, you have 100% interest rate.
It's 100% interest. That's right.
So
that's exactly right.
so
no, those are great points.
Again, I love that expression. Use it as your own because I stole it from someone. So marry the house, date the rate.
I really like that. We are definitely all going to probably use that here in the upcoming weeks and months.
And Linda, I just want to give you a shout out. You're a great president. Thank you for everything you do, not just for the Florida industry, but for the overall industry. So thank you very much.
You are very welcome and back at you. We could not, FAMP could not be successful and have these wonderful webinars and conventions and trade shows without really loyal partners like Angel Oak. And we thank all of you that are on here, Scott, Stacy, and John, and we hope to see everyone again. And if you're not an FAMP member, please join. And if you are, we thank you very much for supporting your industry. So everyone, thank you again, John, Stacy, and Scott, and
Thanks,
we'll see
Linda.
you guys soon, I'm sure.